I'm Dr. Dave Janda. Welcome back to the Insider Insight Show. I am honored to have back with me someone who is a very dear friend and someone who is a friend of every person who values the transparency of financial markets and desires financial freedom. Bill Holter. Bill Holter is a legend on many different planes. He has been described as the best forensic economic analyst in the world. He's also been described as the new, if you will, Mr. Gold. Jim St. Clair, a former partner of Bill's, recently passed away, and that title was actually passed on to Bill because of his ongoing efforts over many decades' time in trying to make the markets transparent for anyone and everyone to see of what was and what has been and what is going on, and that the role of an unencumbered asset such as physical gold and physical silver, about their importance in someone's financial freedom, which is why he was transferred the title from the great Jim Sinclair of Mr. Gold. It is my honor to welcome back the great, oh, by the way, Bill has a great website, Bill Holter, HOLTER.com. Bill also does trading for Miles Franklin on the precious metals markets front, but you can get more information about all of that through Bill Holter, HOLTER.com. Bill, welcome back.
Thanks for having me back, Dave.
So, Bill, when we watch, not that anyone should watch, but I do, just to see what the other side is saying so that our listeners don't have to, but when we watch CNBC, Fox Business News, read Barron's, read the Wall Street Journal, listen to Bloomberg or Reuters, listen to the puppets in Washington. They're telling us, all of them, the economy's great. Bidenomics is working. I go back to a comment made in the 1930s by someone who was very astute at networking information to the public. Might have been evil, was evil, but was very astute. Joseph Goebbels. Here's what he said. Quote, if you tell a lie big enough and keep repeating it, people will eventually come to believe it. The lie can be maintained only for such time as the state can shield the people from the political, economic, and or military consequences of the lie. It thus becomes vitally important for the state to use all of its powers to repress dissent, for the truth is the mortal enemy of the lie, and thus by extension, the truth is the greatest enemy of the state. End quote. Well, Bill, things haven't changed, have they? They keep lying to us.
Yeah,
They keep lying to us on all fronts, including the economic front.
Yeah, pretty much everything is a lie, and you're actually smart. I think. I mean, I do the same thing. I do occasionally turn on CNN, MSNBC, read the New York Times, read the Washington Post, and I think it's useful because I came to the realization a few years back that discerning the truth is pretty easy. If you look at mainstream, you know it's bullshit. So, I mean, it's kind of like a default, if you will, as to what's true and what's not true. If you're hearing it from them, you know it's not true. It's the official narrative to steer people in the wrong direction.
As Biden was heading to the helicopter, Marine One, the other day, on yet another presidential vacation from Zero Hedge, frustrated Biden tells media to start reporting good economic news. He was asked the question, quote, what's your outlook for the economy in 2024? Biden responded, quote, it's all good. All you have to do is just take a look. Start reporting it the right way. End quote. Like a good fascist dictator, right?
Well, Dave, I mean, we could go line by line. We could look at CPI, we could look at unemployment, productivity, GDP, et cetera, et cetera, et cetera. The one thing to look at, and now it is becoming front and center, is just look at the annual deficits. Mm-hmm. If everything was fine, if this country was able to grow on its own without fiscal or even monetary juice, so to speak, then we would not have deficits. Mm-hmm. But now we're running deficits of $1.5 trillion, $2 trillion per year, and there's no eyebrows raised at all. What's happened now is, and we've talked about this before, is that the interest expense has now crossed $1 trillion a year. Mm-hmm. And this past year was the highest tax take by the IRS ever. It was 4.7 trillion. So out of 4.7 trillion, the interest alone is over $1 trillion. So the interest is now more than 20% of the tax take. Defense is another, call it 900 billion. I mean, that's another 20%. So now we've already got, before the doors open on January 1st, mm-hmm. 40% of the taxes that come in during the year are already spent. Mm-hmm. And that number of 1 trillion for the interest is only going to go higher, because as the bonds, as bonds roll off that were issued at 1%, 2%, now they're being refinanced at 5%. Mm-hmm. And even if they got down to 3%, you're still looking at a doubling of the interest expense. So that interest expense at $1 trillion, without a doubt, is going to be $1.5 trillion, $2 trillion within 24 months. And that is the crux of why for years I said the system was mathematically untenable. I mean, it just, you left alone, and markets will, in unfettered times without any type of manipulation, markets alone would have already collapsed. They will collapse as the interest expense gets higher and higher. I mean, if we went out another, 8 years, 10 years, something like that, we're going to be up to 4 trillion, 5 trillion per year in interest only. And that's if interest rates don't go higher from here. Mm-hmm. So I think that's what to look at. I mean, they can fudge the numbers, and they do with everything, with CPI, unemployment, growth, et cetera, et cetera, et cetera. They're all bullshit. They're all lies. But what they can't lie about is how much interest is being paid out per year. And that's the crux of the mathematics that do not work.
And Bill, you have been very consistent on this for decades, that the debt, DEBT, is what blows apart systems. So, right. Bill, when you look at the debt to gross domestic product ratio, debt to GDP ratio, let's scan the world here. The European Union, and anything over, is it fair to say anything over 70 or 80% of debt to GDP ratio, you're teetering on the edge of trouble, correct?
Yeah, Dave, back when we were kids in college, back in the early 80s, late 70s, early 80s, any country that got to 100% debt to GDP was considered a financial banana republic. That's 100%. The world is now 300%. The world is a banana republic.
So we look at the European Union, latest 90%. Japan, 220%. China, 80%. USA, not to be undone, 120%. Banana Republic being at 100, running into trouble around 70 or 80. Banana Republic 100. We're at 120. By the way, Bill, Russia, debt to GDP ratio, 30%.
I think the number of 30% is too high. I don't think it's that high. I mean, just to be clear, when I said debt to GDP, I'm including all debt, and what you're talking about now is just government debt. And if you look at, I mean, if you actually crunch the numbers, the U.S. is 130% at this point.
So we have these huge,
Because we've got,
and we have these huge debt to GDP ratios, yet we're still being told all is fine. All is not fine, as you've always pointed out, Bill. So people say, well, here we are in 2024. We just after the first of the year in the United States, as you pointed out, we are now at, not including unfunded mandates and liabilities, $34 trillion with a T, $34 trillion of national debt. And people say, well, goodness sakes, that's horrible, that at least have some semblance of knowledge of economics. And then they say, but we're seeing gold and silver. Yeah, gold's over 2,000, and gold and silver is gold's over 2,000. Silver's 23. But they should be skyrocketing with these announcements. Well, Bill, the problem is people keep looking at the paper price, which is criminally manipulated on a second-by-second basis by the banking syndicate and governments around the world. But if you look at a physical exchange, which we're seeing now, if you will, purely physical in Shanghai, we have a significantly different price. Educate our listeners on what's happening in China with the physical market prices, and then do a little dissection of what's happening on the paper side here, because even the paper side, they're going to have a hard time containing. They're going to have a hard time containing those prices going forward with this kind of debt.
Right. Well, they're going to have a hard time because of arbitrage, and I'll get to that in a minute. I do want to mention what we were just talking about, debt to GDP. That does not include derivatives, and you're looking at over $2 trillion in derivatives. That's the danger. The other danger, of course, is the dollar is the world's reserve currency. And we are in Banana Republic land. And I do want to mention that each one of those that you mentioned, the EU, the US, Japan, all three of those central banks have negative equity. Because the bonds that they hold in their portfolio, interest rates have risen and those bonds have discounted drastically in price. So you've got central banks now that you can say are technically insolvent. I mean, they can print more money. So it's not like they're going to run out of currency. But from just looking at the balance sheet, they are upside down. They do have negative equity. As far as gold and silver are concerned, there's a $40 or $50 premium now, Shanghai over the COMEX and over LBMA. And you probably don't even need much more than $5 or $6 to create an arbitrage. Meaning you buy gold in New York or you buy it in London and you sell it in China. And what this $40 to $50 premium in China is doing and will continue to do, it's going to drain the physical gold much more from the West. And this has been going on for years, but the gold is moving from West to East. China basically is vacuum cleaning up all the gold from the West because they're offering a premium. So why would someone not buy it in New York and sell it in China all day long and make money all day long? So that's what's happening. And you mentioned the prices have been suppressed with paper. That's absolutely true. I mean, you see days where gold's down $30, $40, $50, silver's down 75 cents, $1, whatever. That's not physical metal being sold. That's paper. Those are paper contracts that are being sold. And there's no gold or there's no silver behind it. It's not actual gold or silver being sold. It's contracts. And those contracts, and I've said this for many years, when people ask me, when is the manipulation going to end? It's going to end in a failure to deliver. Once there's a failure to deliver, and my guess is it will probably be silver first, it doesn't really matter. But once there's a failure to deliver, human nature is such that when a human is told they cannot have something, They want it even more.
Right.
And what's going to happen is a failure to deliver will create the biggest rush into gold and silver ever seen. Now understand that these paper contracts, they don't have gold or silver behind them. What they have is debt. The seller has borrowed money to sell the paper contracts. And I mean, we know for a fact, go back to 1988, the president's working group on financial markets, the plunge protection team, they have been supporting the markets year in and year out. That's why it's considered like basically a put. It's a floor under the market. There's a ceiling over the market of gold and silver. So once the credit markets break, you're going to see the assets that have been held up, those are going to collapse. And the assets that have been pushed down and suppressed, those will skyrocket to unfathomable numbers simply because you're looking at the definition of a short squeeze. You'll have a short squeeze on the physical metal because people are going to demand delivery, and you'll also have a short squeeze where the manipulators, the suppressors, are forced, they'll be bought in. They will be forced to cover. They'll be forced to reverse the sales and be forced to buy.
So I was in the People's Republic of Ann Arbor the other day, and somebody stopped me and said, Dave, try to explain it in the simplest of terms about this whole thing about paper and physical. I go, and tell me if I was off on this. I said, okay. I go, you ever play that game where there's a couple chairs out, and there's a number of people circling the chairs, and when the music stops, you go and run for the chairs? Yeah, okay. Go picture this. Yeah. There are 100 people going around a circle, and the music's playing. And they put up they say there's a screen in the middle, circular screen, and the bankers are telling you, 100 people, you with the paper contracts, there are 100 chairs behind that screen. And when the music stops, just open the screen and everybody can have a chair. When in fact, behind that screen,
there's only one.
There's one chair, right? Is that a realistic way for people to picture what's really going on? And when what stops the music is what you say, Bill, a failure to deliver. A number of those people say, you know what, heck with these paper, I want my physical. Music stops.
Yeah, no, I think that's a perfect analogy. And it is probably well more than 100 to 1. It's probably 300 to 1 is what the real number is. And so that one chair has only got one leg. Mm-hmm. And you have to understand how this occurred. It's called rehypothecation. An ounce of gold, or you name it. We've saw it in the nickel market. This is not it's not conspiracy theory. We saw it in nickel 2 years ago, where there was supposedly X amount of nickel in the warehouse, and a bunch of it turned out to be fake, and a bunch of it turned out to not be there. What happened was that nickel was lent again, and lent again. It's lent, 5, 10, 20 times over. The same ton of nickel, the same ounce of gold, what have you. So rehypothecation is what they've done. And this kind of goes along with David Webb's writings on the Great Taking, is that things have been rehypothecated so many times over. Who really owns that 1 ounce, or whatever the asset is you're talking about? That's the problem, is who really owns it, and ultimately, because of the laws that are on the books, the powers that be own it.
And Bill, you've always spoken about the issue of counterparty risk, that when it comes to physical gold and physical silver, or as my dad used to say, if you hold it, you own it. In other words, there are no claims. If you own it, you hold it. There are no claims of debt or any against that holding that physical gold. But with paper assets, there are always claims against those assets. He used to say paper is vapor. So educate our listeners on that whole situation, Bill, because most people don't grasp the importance of counterparty risk.
Yeah, and in layman's terms, counterparty risk is having someone between you and your money. For instance, a stockbroker. Mm-hmm. You call up XYZ stockbroker, you say, I want to buy 100 shares of IBM. You send them the money. They send you either a paper or electronic statement showing that you own or you hold the 100 shares of IBM. And the way it used to be is, yes, you owned that, but the laws that they have put in and written on the books, they're already there. This is not speculation. This is not my opinion. The laws are, in fact, on the books that says those shares are owned by the broker for your benefit. So you're not the actual owner. It's not like it used to be because the laws have been changed. If the broker goes down, you're not going to get your stock. And people say, oh, but there's SIPC insurance. What is that? Like not even 5 cents on a $100 bill to protect everything. And when this thing goes, everything's going to go together. It will be one huge domino that falls. And I can't imagine that once it starts that it'll last more than 72 hours before everything is closed.
And Bill, go ahead.
That's the danger, is having someone, anyone, any entity between you and your capital, whether it be a bank, a broker, an insurance company, doesn't matter. The laws are on the books.
And Bill, some people say, well, my options, as I see it then, are hold physical gold and physical silver, but you got these bankers putting all these curtains up all the time and telling people one thing when in fact the other option is just to put my money in a bank. Well, wait, Bill, wait.
It's not an option.
It really isn't. So, yeah, right. And that's a very important point. Educate our listeners on why it's not an option, Bill, because when you deposit your money in the bank,
it's not a deposit.
No.
It's not a deposit. You're a lender. You're lending your money to the bank.
Right.
And when the bank goes down, and this is in writing, it's in the FDIC charter. When a bank goes down, they have said there will be no more bailouts. There will be bail-ins. Mm-hmm. And what a bail-in is, just look at Cyprus in 2014. Mm-hmm. People woke up on a Monday morning and they had 30 cents or 30 euros on 100 euros. They lost 70% of their money over the weekend. And where did that money go? It went into the banks to prop them up, to keep them afloat. So again, this is not speculation. It's written law. Mm-hmm. That you are a lender to the bank. You are not a depositor.
Well, and then, Bill, people will then say, well, wait. There's the FDIC, the Federal Deposit Insurance Corporation. Well, Bill, I was just on their website. They are, in their own website, they're saying they are overseeing $17 trillion, with a T, $17 trillion worth of deposits. And when you got to dig. But when you dig and you see, okay, well, how much reserves do they have on hand to cover those 17 trillion? 17 trillion and $10, 17 trillion and $50? No, they have 125 billion.
Exactly.
Ha! Yep, 125.
That's Dave, 125 billion would not have covered the banks that went under last year.
Just in California.
And that was what, 3 banks or 4 banks, and the assets involved were bigger than all the banks back in 2008.
And it doesn't include something.
So they averted.
And it doesn't include something that you brought up earlier, Bill. They're derivative positions.
Right. Yeah, I mean, which is an absurdity because you're looking at 2 quadrillion worth of derivatives. That's what, 6 times total debt on the planet, and how many times GDP is it?
So, Bill, our
20.
Our listeners are sitting back and go, okay, wait a minute. My bank deposits are not safe and covered.
Right.
Any paper asset, whether it's a stock or but has it going through brokers or whatever, and also the issuing entity, United States, the full faith and credit. What does that mean? You're $34 trillion in debt. People say, well, wait a minute. So banks, my money in the bank, that's not good. That's not as protected like I thought. All these other assets, paper assets, bonds, stocks, whatever, well, they all have counterparty risk to them. So the only entities that don't have this counterparty risk, because even real estate, right, has counterparty risk because, you're dealing with entities, townships, cities, states, all this other, right, with property tax, all this stuff. So people go, so really the only entities that truly are protective are gold and silver, but everybody I talk to thinks I'm like crazy for talking about owning gold and silver. How did everybody's financial mind, get so messed up? Bill, that wasn't an accident or coincidence or incompetence that people's minds got messed up through the propagandizing of diminishing, exactly, right? It's all willful.
Right. And you're absolutely right as far as the propaganda. I mean, that's the reason for the suppression, is to prove dollar, euro, yen, etc., currency good, gold, silver bad. But it's pretty interesting that here we are 23 years into the century, and guess what? The best performing asset has been since January 1, 2000, gold. Mm-hmm. Better than the S&P, better than the Dow, better than 30-year treasuries, better than anything. When people, and I've said this for at least 5 years now, when people ask me how much money should I put into gold and silver, the standard answer used to be 10%. And Wall Street would say 3%, 5%. But then the standard answer was 10%. My standard answer became whatever you don't want to lose. Because gold
right,
or silver, right, gold nor silver can bankrupt. Now, you said the only things, those are the only monies that don't have counterparty risk. I would suggest to you that if you have a generator and right, propane or gas or whatever, or you've stocked up on baked beans or whatever, right, real stuff that's in your possession does not have counterparty risk as long as you have lead to protect it. So those are things, but the only two monies, just to be clear, the only two monies on the planet that do not have counterparty risk are gold and silver. And that is why gold and silver have been propagandized against. They've been suppressed by the selling of the naked shorts, unbacked contracts, because gold and the little sister silver are direct competitors to fiat currencies. And understand that fiat currencies do not cost a government anything whatsoever to create. So they're creating, I don't want to use the term wealth, or I don't want to use the term money, but they're creating capital, I guess, if you will, out of thin air. And that's, if something doesn't cost anything to create, then it has no value.
So, Bill, to those,
and that's what fiats are.
So there'll be people that say, "Well, wait. The dollar, although Nixon took us off the gold standard in 1971, we still have 8,300 tons. This is 8,300 tons of gold backing our currency, right?" No, Bill, is that actually accurate?
Well, first off, there's not been an audit since 1956.
Right.
So I don't know, if everything that they tell you is a lie,
Yeah.
Why would that one thing, we have 8,300 tons, why would that be the only thing that's true? I mean, I see no possible way that we still have 8,300 tons. But even if we did, if you do the math, if we had to pay the 34 trillion in debt off, you're approaching $200,000 per ounce that the government says they have. And we're only using the number of 34 trillion. That's the on-books debt.
Right.
What about Social Security? What about Ginnie Mae, Fannie Mae, the guarantees, et cetera, et cetera? You're talking 200 trillion. So you're talking about literally an entire system being propped up on an inverted pyramid that's standing on top of a needle.
Yeah, you remember early in the Trump presidency, he sent his Treasury Secretary Mnuchin to Fort Knox to look at the gold, right? And there was no audit done, right? Because you're right, 1956, last time, no audit, no assay, no nothing. He goes in before, remember this, Bill? Before he goes in, because he had been in the movie business in addition to being a Goldman Sachs dweeb, before he goes in, he goes, boy, wouldn't it be an incredible movie if I actually went in there and there wasn't anything there? Wow, okay, I'm going in. And he goes in, and he comes out like, I don't know, an hour later or whatever. And they said, well, Mr. Treasury Secretary Mnuchin, whoa, what did you find? Whoa. And here's what he said, Bill. Quote, gold is good. End quote.
He told the truth.
He told the truth.
Gold is good.
He didn't say, hey, that gold in there, whoa, we're good at 8,300 tons, or whatever, it's between West Point and here. No, gold is good. Hey, I'll see you later. Bye. He
told the truth. He didn't lie.
No.
He lied by omission, obviously.
Right.
But yeah, I mean, it was a pretty comical statement.
And Bill, while they're telling us that you're a Neanderthal if you find that your financial security is based on physical gold and physical silver, central bank purchases just for the first 9 months of 2023 total. So they're telling you, nah, don't do that. Buy that paper stuff. Buy the 800 tons just in the first 9 months. Just the central banks. Countries expanded their bullion reserves, such as China and Russia and Indonesia and Turkey, 337 tons just in 3 months. And they're telling us, nah, keep buying that paper. Keep walking around while the music's playing.
Yeah, you need to do what they're doing.
Yeah.
Not what they're saying.
Good point.
Yeah. And I mean, I would ask, okay, so if gold truly was bad and the dollar truly was good, why do you have China? Why do you have Japan? Why do you liquidating treasuries? Why was it just a month back, I guess it was, the United Arab Emirates? And I thought, I mean, this was shocking to me that there was like no reaction to it whatsoever. The United Arab Emirates came flat out and said, we will accept any currency for our oil with the exception of dollars. We will not accept dollars. And that came, I guess it was a year and a half or so back. Saudi Arabia, maybe it was only a year ago, Saudi Arabia came out and they said, we will accept all, any and all currencies, including the dollar. Mm-hmm. And remember back to 1973 when the petrodollar was formed, it was this big thing that the Arab countries led by Saudi Arabia would only accept dollars.
Right.
And that lasted, it lasted until, I think, 2022, when Saudi Arabia said, we will accept other currencies. Now you actually have an Arab nation saying, we will not accept dollars. If that starts to spread, and I'm pretty sure you'll see it will spread, I mean, it is the death of the dollar. It's the end of an empire.
And we see the emergence of the BRICS countries, right? The BRICS countries.
Yeah, the emergence of the BRICS countries, they are, without a doubt, they are moving toward commodity-backed currencies that are backed by, whether it be gold or silver, oil or natural gas or whatever. Their currencies are going to be backed by something real. I do want to add into what I'm talking about, the end of an empire, and think this one through. Literally for the last 20 years, the U.S. attracted capital for years, for ever since World War II, the end of World War II, the U.S. attracted capital because of the ironclad rule of law in the United States. Well, back in the 90s, early 2000s, the U.S. started cheating, so to speak. And it's gotten to the point now that you can't do a deal with the United States because it'll be reneged on. And people all over the world know that. So less capital was coming to the United States based on a rule of law that was starting to break down, but there was no alternative, and there was a stick held over their head called the U.S. military. The U.S. military basically forced, look at Gaddafi, look at Saddam Hussein. They talked about doing gold-backed currencies, and what happened to them? They got overthrown, they got killed, and their gold was the first thing that was taken, by the way.
That's right.
So just understand that for the last probably 20 years, the U.S. military, or the threat of the use of the military, propped up the dollar. Now we're at a point where the U.S. has suffered just total embarrassment. Look at Afghanistan. Mm-hmm. Not only that, we do know now that Russia has hypersonic weapons.
Yes.
We do not have hypersonic weapons. Nope. You could wake up, it could be happening right now during the interview. A hypersonic weapon shot at an aircraft carrier that'll be at the bottom of the ocean in an hour or two. Mm-hmm. Who knows? My point is, any day you could wake up and find out we suffered, a horrible defeat. What will that do to the dollar? Mm-hmm. What will that do to the entire financial system? Mm-hmm. That will be game over. So I did want to add in there that the threat of the stick of the U.S. military is no longer that big of a threat.
So, Bill, when you add this issues of our domestic economy in beyond a recession, I love it when these people say, "Well, we might be entering a recession." What are you talking about? Take a drive. Take a look at your closest mall or strip mall. Or down Main Street and all the border. Come on. When we look at all these issues domestically that we've discussed, when we look at these issues internationally, when we see the emergence of the BRICS countries, again, openly speaking about a new trading type of currency that is, as you mentioned, commodity backed, when we have countries such as Saudi Arabia becoming a member of the BRICS and 41 other countries lining up and say, yeah, we'd like to go along with that BRICS group as opposed to what's been going on in the West and the United States. Bill, when we look at this, do you believe historians will look back many, many years down the line at 2024 and say, that was the year of the end of the financial empire of the United States?
I think 2024 is shaping up to be a disastrous year. And I say that because it's my opinion that there's less than a 50-50 chance that we even have an election. Mm-hmm. They really can't allow an election because if they do, I don't think they can cheat enough to stay in power, those that are in power now. And if they don't stay in power and we even return to any type of semblance of a rule of law, you're going to see massive amounts of people going to jail. So it's my expectation that whether it be real or a false flag, something really big is going to happen before the election, and we won't have elections. I think historians are going to look back at this whole episode. And when I say the whole episode, really the episode is from 1971 till now, when the U.S. went off the gold standard. What that allowed was it allowed the U.S. to borrow over and above the tax receipts that they took in. It allowed deficit spending. And as we talked about earlier, deficit spending now is $1.5 trillion, $2 trillion more than the tax receipts that are taken in. And I think historians will look back and they'll plainly see and plainly say that if you stripped out the trillion a year, $1.5 trillion, $2 trillion a year out of the GDP, we've had negative growth for how many years now? Because, I mean, when deficits are created, that money is actually spent and it's counted in GDP. So if we ran a neutral balance sheet each year, if we didn't have deficit spending, no surplus, no deficit, this country would have been declining year after year after year officially in the statistics. But the statistics were fudged based on the amount of debt that was borrowed by the U.S. government and thus spent into the economy, spent and became part of GDP.
It's my understanding, Bill, that Vladimir Putin is essentially the spokesperson, the individual kind of running the show for the BRICS group just started on January 1st, 2024.
Right.
What would be the ramifications if Putin, as now the overseer of the BRICS group, issues a communique stating, starting X date, we are encouraging all the countries affiliated with the BRICS organization and those that wish to join the BRICS organization to utilize the trading currency that we are proposing and putting on the table that is backed by gold, silver, gas, natural gas, oil, whatever, commodity based. And the ramifications of that, would that be the day that music stops, Bill?
It absolutely would be or will be. And let me make a prediction when that day is going to happen. You saw the news yesterday, right?
I did.
That the White House is suggesting that the seized Russian funds be used to rebuild Ukraine.
$300 billion.
Right. So if that $300 billion is actually confiscated and starts to go to Ukraine, it'll be that day.
Yep. Exactly.
And the day that's announced, I can't imagine it would take even less or even 24 hours. As soon as word got out that happened, Putin will basically come right out and say, we're not using dollars anymore. We recommend any and all BRICS nations not use dollars anymore because it is a fraudulent system. And think about this, Dave. If the United States can steal from Russia, is there anyone on the planet that they cannot steal from?
Everyone's vulnerable.
Right.
And that's how every country will see it, Bill.
Exactly.
And justifiably so, might I add. That wouldn't be like crazy thought on their process.
No. I mean, if you actually go back, and I'm not talking about, seeing the snippets on CNBC or the New York Times or whatever, if you actually go back, and I think he's made now 6 or 7 full-length speeches. If you read Putin's speeches, read it, even if you want to read it with a closed mind,
right?
You're still gonna see that the man, all he's saying is, we want free and fair trade and true settlement. And true settlement means getting paid with a currency that actually has intrinsic value and is not a fiat currency that has value simply because a government says it has value.
So, Bill, let's close our interview with this. You are a guru in precious metals, a subspecialist, if you will, for my field in medicine, subspecialist. When you look at the supply of physical gold and physical silver and compare today and where we have been in the past, How does it compare? And also on the not just the supply side, but the demand side.
Yeah, understand that there's two markets.
Yep.
There's a retail market and an institutional. Actually, there's three markets. There's retail, there's institutional, and then you've got the sovereign market where you've got governments that are buying. What's happened is back in March or April last year, when the banks in California had a problem, there was this huge rush by the American public, by the Western world, into gold and silver. What that did was it absolutely swamped supply. Premiums went through the roof. And I'm going to say just over the last probably 60, 90 days, that demand has definitely cooled off. Look at the premiums. The premiums are now back to where they were pre-2020. And the premiums started moving up during COVID because people were looking at, the financial system's going to come down. I want gold. I want silver. I want it now. So there was a huge rush from a retail standpoint. That rush has abated. So from a retail standpoint, now is much better time to buy because the premiums are much lower, but we're not seeing the demand and the supply is ample. From an institutional standpoint, you're obviously seeing deliveries out of LBMA and out of COMEX that are going into China, into Shanghai. That's an arbitrage that makes too much sense not to be done. The real buying is being done right now by the sovereigns. You've got central banks and sovereign treasuries all over the world that are buying primarily gold. And we could talk about silver too. The demand on silver, the supply demand number on silver is laughably upside down. There's so much more industrial demand because of solar panels, the green energy, et cetera, et cetera. I mean, we're running a 300, 400 million ounce deficit at this point, yet the price is still being pushed down. That's going to lead, like I said, it's going to lead ultimately to a failure to deliver. On the gold side, the real demand is coming from the central banks. How long it lasts, I wish we had an indicator. I saw I knew the Soviet Union was going to collapse. And back in 1989, I was vocal about it because bars with the Tsar's stamp on it were turning up all over the world. And what that told me was they were at the bottom of the barrel. That was the only thing that they could sell for hard currency. I don't know of any indicator today that would be as foolproof as that. So, I mean, I can't tell you, I suspect it's going to be next week or next month or whatever. All I can tell you is the volume over time that has gone from west to east, we have to be near the bottom of supply as far as what the West can supply.
And Bill, do you find it of any significance that entities, corporate entities such as Costco and Walmart have been selling now gold and silver, and in fact, if you go to Costco's website, they're constantly sold out of both.
Yeah, and you're not even allowed to purchase a large amount.
No.
I mean, what they're doing, I think Costco's numbers were 100 million for the quarter or something like that.
Right.
That's I look at it as more symbolic because 100 million, I mean, that's 400 million in a year. That's a ham sandwich. I mean, you've got so many precious metals dealers now that are doing $1 billion a year, 2 billion, 5 billion. $400 million is a drop in the bucket. But from a symbolic standpoint, they're running out because they've got, mom and pops that are buying their 1 ounce of gold or 10 ounces of silver, whatever. I know there's very, very low limits.
Right.
So that tells me that it's a huge quantity of shipments, but not a huge quantity of weight.
Right.
if that makes sense.
Right, yeah, because in Costco, I believe with gold, the most you can buy as a member are 2 ounces, two 1 ounce coins, and Silver Eagles, the most you can buy are 2 tubes, each tube being 20
40.
coins, so 40.
Right. 40.
So you're right. I mean, so but it actually, to me, it sets the stage for right.
Standpoint.
Right.
Right.
Because
yeah.
And I've talked to some of my friends used to tell me, well, you know what, Dave, it's gold and silver stuff. When I start seeing it at Walmart, when I start seeing it at Costco, then I'll know that people, there's some, for them to do it, they have recognized the fact that people are recognizing that there's something to this. Well, here we are, Bill. Here we are.
Yeah. That's why I was saying from a symbolic standpoint, from a perception standpoint, it's probably I was surprised. I was surprised that they didn't get a tap on the shoulder saying, "Hey, you really don't want to go into that market." We don't. From the standpoint of the powers that be, they don't want people talking about it.
Right.
They'd rather it just be off the radar. They don't want it brought on the radar.
And the only reason why they might have allowed it, Bill, is to say, let's use it as a thermometer. If people are getting jumpy about our fiat dollars, let's see how many people actually have kind of figured this out. Because it might make us make us increase our timeline for a false flag or something else. Because you know what? If they're figuring this out, we don't want too many people figuring this out. we don't want too many people protected. I don't know.
That's possible. That's possible, but that's purely speculation.
Right. I understand.
I mean, you got to be into the mind of some evil people to
you sure
understand.
do. Yeah, and I'm not sure we could ever get there because they are evil, man. Oh, Bill, so educate our listeners in how they can contact you, how they can follow you, and as I mentioned, you are a dealer in precious metals. So educate our listeners on all those fronts.
Yeah, you can go to my website. It's almost a year old now, Dave. It's www.billholter.com. I have changed my email. You can contact me through the website. My email's up there, but my business email is bholter@proton.me. And if you want to contact me directly on financial questions, or if you want to purchase gold or silver, please feel free to contact me.
And again, you're always available on the website, billholter.com. Bill, I'd like to thank you for everything you have done, are doing, and will do. Thank you for your insight, and thank you for the courage of telling people what they need to know, what the power brokers do not want them to hear. And I thank you, Bill. You've done that for decades. You get a lot of heat. I know for a fact you get tremendous heat. And I thank you for your perseverance, dedication, and sacrifice. And I thank you folks for joining us. Until next time, Dave Janda signing off. Dream big and dare to fail. Thanks for your time today.